love the channel and find it useful in becoming a happy retiree. Subscribe today. We've talked a lot about this tax bill over the last 6 months. We thought it would happen. I know there was a lot of doubt in the media that this tax bill didn't have a chance because healthcare didn't pass and there's no way they're going to pass tax reform. That just didn't seem like it was going to be the case. And of course, this is going through now. And 90% of Americans are getting a tax cut. 90% of economists say this isn't going to be a big deal for the economy, and they're just all wrong. Don't overthink this. We're going to get $205 billion of stimulus next year alone in 2018. $120 billion of that is coming to you, the individual, the families in America. The other $85 billion is going to go to corporations. So if you don't think that's going to be good for the economy, I don't know. I don't see how that can not be a huge win for the U.S. economy. Now, the purpose of today is try to figure out the nuances of this bill, figure out what it means for you specifically. And we just talked to someone who had one kid, but had 6 daughters, and we ran it as in both different ways. If you have a lot of children, it means a lot because the child tax credit has gone up dramatically. It's gone from $1,000 per child all the way to $2,000. So someone in that scenario, if you have 6 kids, the scenario that I just ran, if you're just tuning in, $115,000 state of Georgia, married, filing jointly. Do you currently itemize? No. If you have a bunch of children, what it would do, it would basically make your tax bill, if you had that many kids, you have 6 dependents, at least what my calculator is saying is you'd effectively have a federal tax bill of 0 or negative. And instead of having a $3,700 tax bill, it'd be 0. So that's a hallelujah. And that's a lot of the calls that we've had here today on Money Matters. This is a tax cut for 90% of Americans. Don't listen to the media that says it's not. I'd love to hear in the 4 o'clock hour, because we have another hour of this, special tax edition of Money Matters. I'd love to hear from some folks that have big real estate deductions and really high incomes. And I want to run some of those numbers for our audience to see if even at the high end of the income spectrum, what that does for that group. And if you are stuck in traffic and you're trying to think about last minute Christmas presents, and then in your head you're thinking, man, it's been an expensive year, and we think that at this time of year, and I got to go buy a bunch of Christmas presents. Well, not to mention you're sitting in traffic to do that, and then you got to go travel. Which is another fortune, particularly if you have kids. And you're thinking, well, I got to make 2 plane tickets. Me and my wife, I got another couple kids. I'm going to wherever I'm going. And you're thinking, well, Christmas is costing a fortune. Well, guess what? 90% of Americans are getting a tax cut. Now, it's not coming today. It will be in 2018. But you've heard in the media, you've heard from politicians, you've heard from pretty much every news outlet you can think of that taxes are going up. It's only a tax increase for the wealthy. That's wrong. I've been covering this for the last 6 months, knowing that this would happen. And there are calculators out there that give you a really good idea with the new tax brackets and the new increases for childhood exemptions or credits, with the new mortgage interest deduction, with the elimination of the SALT, state and local income tax, to give us a pretty good idea of what your taxes are going to look like in 2018. So I ran 50,000, 75,000, no kids, 2 kids, 100,000, 150, 250, $1 million, $2 million, Georgia, California, New York. And I got to tell you, most of you are getting a tax cut, and a pretty big tax cut. In the 3 o'clock hour, we took about 5 calls. Every single one of those families is going to see a tax decrease in 2018. Money in their pocket. And that's a big thing to understand right now as we head into arguably the most expensive time of the year. This is when you feel guiltiest about, gosh, I've got to do this, I've got to do that, got to travel, got to buy. Guess what? You're going to get a little relief. And oh, by the way, the big picture that impacts all of you, me, us, WSB listeners, is that this is going to be very good for the economy. $205 billion stimulative to next year's GDP. That's going to add at least 1, maybe 2% of growth, maybe even more, as this kind of lifts the animal spirits in America. So I think of this, and it's Christmas time, And it's kind of that Christmas time of year. It's Christmas in America. 90% of Americans have just been given the gift that keeps on giving.
Clark, that's the gift that keeps on giving the whole year.
The whole year. And I'm not talking about Jelly of the Month Club. I'm talking about the largest tax cut overhaul in the history of America. Yes, that was a clip from Christmas Vacation. It's on every day, 20 times a day this time of year. It's my wife's favorite movie. It's not just her favorite Christmas movie. It is her favorite movie, period. I don't know why she identifies with Clark Griswold so much, but she does. I'm just praying that she doesn't go on the roof to try to staple a bunch of Christmas bulbs into the roof. Maybe knock down a tree or two in the neighbors. There's a lot to this on the economic growth side. The corporate side tells me that because companies are going to be paying less, so the corporate tax rate in America is going from 35% down to 21%. What does that mean for your 401k? Question mark. It means that companies in America are going to have higher earnings because they're paying less taxes. Just like you're going to have more money in your wallet after you pay taxes. You're going to get higher earnings. So are companies. And remember, the stock market, everything that matters to the stock market is earnings. So as earnings go up, it's obviously a very, very good thing for equity markets. It's a big reason why the stock market in 2017 is up close to 25%. So the market has started to sniff this out and say, wait a minute, companies are going to get a big tax break, more earnings may equal more profits, which drives this market higher. We're looking at about a 10% increase in what companies earn in 2018 due to these shock and awe tax cuts. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.